Wall Street, remember, they closed off for trade at 1 p.m. in the afternoon. They go into half of Wednesday and full of Thursday will be closed for Wall Street on back of Independence Day. So volumes were generally lighter than what we've seen usually, and no major price action, even though few records were made on the Nasdaq and the S&P. Well, you have a bunch of data points the markets will be watching out for. There was some that came out too in terms of trade. Nvidia continued to gain, so did Tesla. Tesla rallied quite sharply, jumped another 10% after it sold more vehicles in China than expected, and this comes in after the stock had rallied post-market closing on Tuesday as well. Nvidia was up 4.5%, so that of course helped Nasdaq as always. In terms of data points, private employers have added fewer jobs in June. This is the third straight month when payroll growth has slowed. So this is an important ingredient. This is private sector data that goes into the unemployment and employment figures that come out from the US. So if that is showing a decline, there is a good chance that unemployment could have risen in terms of data watchers' belief. Apart from that, unemployment claims have also ticked up. Trade deficit has expanded to a 19-month high, and service business activity has contracted in May, and manufacturing orders have fallen in June. So from what it seems like, weak data is usually supposed to be bad news, but for world markets or for US markets, it's viewed as a positive because it again ignites hopes of a rate cut that we haven't seen yet by the Federal Reserve. Treasury yields and the dollar were lower. Oil and gold and silver, on the other hand, gained on back of a weaker dollar. Most major cryptocurrencies also fell in trade. Trading volumes was muted across the debt markets and equity markets on Wall Street, and a similar sort of trend across Asia as well this morning, Niraj. So it's interesting. We live in interesting times. A weaker economy is actually good for equity markets.
Yeah. Two other things that stood out for me. One, Jeff Bezos planning to sell almost $5 billion worth of shares after record highs. So, it's not just happening in India.
Promoter stake sales happening worldwide.
Not just happening in India. So that is one that in terms of global news flow. And the fact that while last evening was all rumors around whether Joe Biden will drop out of the presidential race or no, this morning he's come out and vowed to stay in the presidential race as well. So that's the other big thing from the US perspective that maybe you just want to take note of. But so, yeah, a couple of things really, and post this debate, of course. But trade setup for our markets, I think it's just become difficult to call tops. Yesterday, as C.K. Narayan was saying when I asked him that, could the markets come back? And he said people have been calling for a pullback for a while and it's not happening. So it's very difficult to call tops despite all indications pointing to those. I thought that yesterday the markets would be skittish at higher levels. They haven't been. And today they will probably inch up higher as well. So that's part one. And I think global cues will just ensure that today, at least, the markets continue to edge higher in today's session. I think the highlight of the trade yesterday, to my mind, was not what HDFC Bank did, because it didn't end at the day's high. What ended at the day's high were stocks like Bandhan Bank, ICICI Bank, which started off lower and ended up 1% higher, Kotak Bank, Axis Bank. I think the non-HDFC Bank shares taking the bank higher, because if you remember the trade day before yesterday, HDFC Bank was the only one in the green. All the other banks were in the red. In yesterday's session, it was quite a bit of a turnaround, where a lot of other stocks went up and actually didn't start off that positively, but then ended up higher. So the bank Nifty propelled higher, not just because of HDFC Bank, but because of a lot of other stocks. Bandhan Bank, ICICI Bank. Federal Bank was anyways high, but ICICI Bank as well, or a Kotak Bank. Look at the way these stocks trended higher in trade yesterday, and that was actually the beautiful part from a bank Nifty perspective. And the other pocket that you really want to watch out for, we'll talk about it on the editor's cut, but defense. These guys are on steroids. For a HAL, yes, up 2%, but a Garden Reach Shipbuilders, Cochin Shipyard, Zen Technologies. Me and Samina were popping our eyes in disbelief at the kind of moves that are happening. At least I was in disbelief. I don't know if you were.
I think we've been seeing this for 3 months. Now I'm used to it. I'm used to finding one stock from the defense pack that usually does a 10-15% up move. But I don't think it's fair, Niraj, to look at those stocks as a one-day return. If you pull up all those names you mentioned, they are up 50, 60, even 70% in the last few months. So let's take a look. Garden Reach, if we can get a 1 month and a 3 month return on that, it gives you an idea of the kind of buying this sector has seen. Early part of this year, this was election trade. There you go. In 1 month, the stock is up 100%. So I was understating that number. Garden Reach up 92%. HAL up 26%. Take a look at Cochin and Mazgaon, because I think those would have done quite well as well. PEL is up 24%. HAL, BDL, Cochin Shipyard, like I said, another top gainer, 35% on that one. Mazgaon Docks, 75%. So in that order, it's the Docks, Mazgaon, Cochin, Garden Reach, Mazgaon and Cochin are your top three gainers. BDL, after its stock split, has taken a bit of a break. HAL usually follows what BDL and BEL do. So it's the last mover in that defense space. So there you go. Like I said, it's been a slight relative underperformance compared to its defense peers, but still a top gainer on the Nifty 50. So in 1 month, it's up 13%. Let's take a look at HAL while we're at it. Like I said, it's BDL has taken a bit of a break. HAL is up at 26%. So I think if one had to call the next stock that's going to do well in the month of July, my bets would be HAL and Cochin Shipyard, only because these stocks move in tandem with each other. And I still remember that from Jan to June, the rally really was on back of the election play. We thought once the election would be behind us, these stocks would have taken a breather, but that's not how it's played out. Order wins are happening, Navratna statuses are being given out, global deals are underway, and all that is keeping the sector abuzz with activity. Garden Reach a few days ago won an order worth 1,100 crores. HAL is up 95% this year. So if wealth has been created, it's been created significantly in the defense pack. But just coming back to another point on the markets where I feel like the bulls may be in a little more control, look at the VIX. It continues to fall. It's down about 3.5% to trade at levels of 13. The PCR ratio also looks extremely comfortable. There you go. The VIX is down 50% in the last 1 month. So we are back at comfort levels at 13.21. So option costing as well is looking a lot more efficient, and that could be encouraging and a further upside. But what I would imagine is we may get a gap up, but it could be an afternoon where the markets will see some profit taking. Volumes are going to be low, so Europe may not see a big gap up, and hence the handover from there will keep us a little bit on the edge. But up until then, 24,000 remains important, and the markets will consolidate around those levels. 24,556 is an important level on the upside to be tracking. Well, that's what I think in terms of markets, but a quick check on the stocks you want to trade this morning. It's not your usual banking names, but it is the banking and financial sector that once again will be in focus. A couple of business updates, and remember, this is now the season. The next couple of weeks will be about business updates before companies start reporting earnings. So the trade really will be coming in from those quarters. The top one on the radar this morning is Bajaj Finance. They've had a stellar reporting. Their new loans have grown by 10% YOY. The AUM has grown significantly by 31%, and now that is eye-popping, and that's largely eye-popping because of what has happened in terms of regulation on that front. So there was enough and more data points that indicate that this could be here to stay. They've resumed, in fact, Bajaj Finance has resumed after sanctions and disbursal of loans under e-com and Insta EMI card, and the issuance of EMI cards after the RBI has removed the restriction on these businesses from the 2nd of May 2024. So that big bump up is on back of resume of business, of course. So you're seeing a lumpy sort of number in terms of AUM growth. L&D Finance also didn't do too badly. Their company reported portfolio realizations at 95%. Retail disbursements are also up significantly, so it's not just Bajaj Finance. In the case of L&T, it's up 33% YOY, and the retail loan book is also up 31% YOY. There are a couple of more business updates, and I'm sure Niraj will take you through those as well, for the likes of Bandhan Bank, which was a top performer yesterday. But I'll quickly highlight two order wins, two M&A activity. Persistent Systems could be a stock to watch. I'd also imagine IT could see some buying in today's day of trade, so Persistent may stand out. The stock was an outperformer yesterday too. They've talked about acquiring 100% stake in a US-based software company, Starfish Associates, for $20.7 million. And in terms of order wins, GE T&D could be one you want to track. They've bagged an order worth $64 million from France's Grid Solutions. So it could be a big mover today. They've already done 3% yesterday. Another couple of points in early trade is what I'd expect.
Yeah, and speaking of Q1 updates, because I think this is what will happen every single time now for the next few trade setups that we do, that we'll be bogged by results and Q1 updates. But it's not a bad problem to have. Suryodaya Small Finance Bank, the Q1 update, gross advances and deposits up 42% YOY. That's a large number out there. CASA ratio at 17.5 or 17.7. Gross NPAs improved quarter on quarter. Won't be surprised if this one has a bit of a positive move in the session today. So that's something to keep an eye out for. Watch out for Bandhan Bank, was a big mover in trade yesterday. Now what's happened is that the loans and advances are up 21.8% and deposits are up 22.8%. Ordinarily, I would think that this is a very good set of number, and I still think it is. CASA ratio at 36% versus 37.1. Nomura though came out with a reduced rating on Bandhan after this, of course, and their target prices are lowly 170. They say that while loan growth has picked up, CASA has declined sharply. To be honest, maybe Nomura is being a bit too harsh, but let's wait and watch. It's had a bit of an up move yesterday. I would have thought ordinarily that Bandhan could get rewarded a bit further, but Nomura believes that the Q1 has had some disappointments. So let's see. Difficult to call which way this one will react. So watch out for both of these on the financial side as well, in addition to Bajaj Finance, which was a hefty one, and we'll talk about it at Editor's Cut, as well as L&T Finance. And I thought the price hike from Gujarat Gas was interesting because while there is a price hike, brokerages don't seem too enthused by this. So IGL, MGL have done very well, Gujarat Gas hasn't. And Citi says that this price hike reflects margin concerns and will likely drive a volume loss for Gujarat Gas. UBS has a similar view. They say that the price hike could divert some volumes towards alternative fuels like propane. And therefore, let's wait and watch if indeed this stock, which is kind of sulked a little bit, could actually do more sulking. So that's the other one. And Samina, QIPs galore.
Yeah, Cello, of
Cello
course.
World,
Yeah, but
right?
just, you want to talk about Cello before I talk about Brigade?
Yeah, just the stiff discount, right? 730 crores QIP for a company that is not very old in the in the listed landscape, and at a discount of 11.26%, which means that the book didn't see buying at those
higher levels,
current market prices. So it could be interesting to see how this one reacts.
Niraj, I mean, I don't know whether I'm right here, but in the last couple of weeks, all the QIPs or promoter stake sales that we've seen, barring CSB Bank, they've all come at a pretty significant discount. So, I mean, of course, that says something, says nothing is anybody's guess. But
exactly.
The fact remains that the markets are euphoric. Promoters are checking out or taking some portion off the table, but some of it is coming in at a significant discount. Another one that I think could be the stock of the morning is Brigade Enterprise. The reason being they've signed a JD for a residential project which has a potential of about 1.2 million square feet. The gross development value of this project stands at 1,100 crores. So this is a pretty big one for Brigade. We will try and connect with the management through the day to get a sense and understanding of what this means for Brigade Enterprise, what geographies this is as well. But this, in my mind, could be another gap-up trade on the cards. You talked about Bandhan. I don't know if you mentioned Suryodaya Small Finance Bank. That also
but good numbers,
has had a good set of numbers. Vedanta as well, their production has come in. It's up 3% YOY on back of better operational performance. It was also a trading call by a few analysts on the channel yesterday. So it'd be interesting to see with a fundamental news trigger that is positive, you may get a gap up because technically as well the charts probably were preempting this in trade. A couple of quick data, information update on the FNO place, FNO ban. Hindustan Copper and India Cements remain in the FNO ban. Indus Towers is now out of the FNO ban. So you've seen a muted sort of movement on the counter. But today could mark a day when you'll see big moves on big volumes emerging on that one. Stocks that have turned ex-dividend, you've got Tata Power, SKF, Solar Industries, and that's the movement. In fact, Solar was one of your big gainers in trade over the last couple of days. Today turns ex-dividend. Tide Water Oil and Balaji Amines. So that's what we have in terms of activity. Lots of action in the primary markets as well, but we'll track that in a bit. But like we've said, the talking point is defense. We've been harping about this from Jan. There's been an enormous amount of wealth been created if you own these stocks. But remember, mutual funds do not actually are under, don't have an underweight in terms of defense stocks. So portfolios on back of defense may not have done too well. But nevertheless, if you own those equities directly, you're laughing your way to the bank.
Yeah,
it's also spoiling you, I think, because then you start expecting 20-30% returns
from every other sector
on
as
weekly
well.
basis.
And from other sectors too. So Alex, we talk about defense and we talk about Bajaj Finance, which is actually on the offense in the Q1.
Absolutely. And in fact, it's going to be a fascinating conversation, I think, and particularly in the context of some people who had doubted whether or not Bajaj Finance would deliver the numbers that it ended up delivering, considering that May was when it got back or got beyond those restrictions that had been placed on it by the Reserve Bank of India, and two very critical products for the company in the lending space that were supposed to have impacted numbers. But then, look, that didn't pan out. What actually did pan out was a very strong set of numbers. The AUM growth, of course, is what everyone's focusing on, but drill down into the numbers for us, Harsh. What stood out?
So, Alex, essentially it's a 7.1% sequential growth when it comes to AUM, 31% plus on a year-on-year basis, and they've guided for 26 to 28% in FY25. So really the standout is the fact that they've done much beyond that in Q1, which is otherwise a seasonally softer quarter, right? So that's point number one. Point number two is generally Bajaj Finance Q3 is extremely strong. Of course, given seasonality, Q2, Q3, depending on when
because of consumer loans,
festive season sets in, and therefore will be interesting to see as to how Q2 and Q3 pan out. But if they were only to achieve the 28% growth target, which they've guided for, they only need to grow at 6.1% sequential basis, back of the envelope math, 6.1% sequential in Q2, Q3 and Q4. And if we can pull up the numbers in the last 7 quarters that they've done growth of more than 7% in 5 out of the last 7 quarters. And therefore, very strong chance that they might beat that 26 to 28% guidance band for FY25.
Do you recall what happened in the other 2 quarters?
6.1 and 5.7.
Yes, 5.7.
Not bad, Niraj.
Or thereabouts. From a reason perspective, you're absolutely right, 6.1 and 5.7. But from a reason perspective, I'm not sure what were the one-offs. 6.3 that they clocked in Q4 FY24 was largely on the back of these 2 products being embargoed.
Yes.
And therefore, that was one of the reasons. The 5.7, I'm not so sure, but it's something worth looking at.
So the chances are that they are going to beat their own guidance. Do they change that at any point? Will they review it possibly this quarter?
It's generally very unlikely of them to come out and change their guidances, not till H2 FY 2025. I don't expect that to happen at least till H2.
Okay, so the growth is in place. What about the valuations?
So honestly, when you're looking at
sorry, can I just slip in a question before we get to the valuations, right? So, Harsh, interesting that UBS said that they expect weak EPS growth of 11% YOY, which is the slowest in the last 12 quarters because of higher credit cost and decline in NIMs. So while they're having this AUM growth, could the other parameters match as well? Is it possible to hypothesize about what could happen there?
So, Niraj, excellent, because that's where I actually wanted to kind of deep dive a little bit before going ahead. So, there is an expected 30 to 40 bip NIM contraction in the first half of FY25. This has been guided for and therefore likely priced in.
Okay.
Right? And you saw a whole slew of brokerages cut their EPS estimates in Q4 FY24 post this guidance. So, I think the likelihood is that basis what most analysts are projecting, this number is a beat. And therefore, likely EPS should also be a beat. It may be a marginal beat, but it likely should be a beat. Now, the only question is how much does margin moderate in Q1 FY25?
Is that going to be on the basis of the product mix? Does that change at all?
It does change on the basis of product mix, but we don't have the AUM numbers.
So that I'm saying, what is the worst case scenario?
It's going to be tough to say, but likely double digit is still expected from an EPS growth perspective. So it's tough to say exactly or quantify exactly how much the EPS will get impacted by if the margin number changes dramatically.
So what's the reaction there for Harsh? I mean, will it likely get a thumbs up today, and does that bake in then the positives from quarter one? Because in cricket parlance, they have done fabulously well in the power play, and the required run rate is not very high for the rest of the overs.
But you can't count on required run rate, as we know very well based on the World Cup final.
Well, so you're absolutely right there. Generally, Bajaj Finance is a stock which moves on the basis of growth. And that's what most street analysts want to look for, or that's the real clincher, if I can call it, from an analyst perspective. So, and because the growth number is better than what most people were penciling in, likely the reaction should be positive.
Okay.
And of course, then it will depend on how the final numbers actually pan out, which is maybe 2 to 3 weeks away. And thereafter, where does commentary lie?
Yeah, okay. So hopefully batting like Virat Kohli and not Klaasen in this case, and is steady.
You
not
mind batting like Klaasen?
No, I mean, come on. So history being the judge, right?
Okay.
Hardik Pandya took the wicket when Klaasen was looking really good. That's the context. All right. Okay. So run rate was really good.
The context. Yeah.
He missed the context. All right. But no, let's talk about defense then. Let's move on.
They are batting like Klaasen.
They are batting like Klaasen, effectively. So, but the question is, do they get out like Klaasen did to Hardik Pandya is the question.
Yeah, anybody's guess. I mean, if this was a test match, then I would say that bat like Klaasen doesn't matter. You will get a chance again, right? I mean, but just look at the returns. Samina was talking about the 1 month returns, and I think she was being unkind to those stocks, because you look at what they've done over the year.
Yeah.
Right? And that is the fascinating story. So Zentech in 1 year is up 139%. If that is not too impressive, HAL 189, GRSE 325, Cochin Shipyard 757% in the last 1 year. I mean, this is stuff that dreams are made of. What it has done is take their trailing 12 months PE, and sorry, I'm using the trailing 12 months PE, which is not the right metric, because these are growth stocks and you should look at them 2 year forward, 1 year forward. But just for commonality, and the trailing 12-month PE for a lot of these stocks is now very expensive, right? But I'm playing the devil's advocate and trying to say, why is it that some of these stocks are being bid up so much? So recently in an interview with us, Zen Technologies said that the next 5 years will dwarf what has happened in the previous 10 years. The previous 10 years include the last 3 years, which have been very good, right? Even if you discount the pre-COVID period, the last 3 years have been very good for defense. But Zen says the next 5 years will dwarf what has happened in the last 10 years. Jefferies came out with a note on defense. On HAL, they said that the sentiment remains upbeat on defense indigenization and focus on exports. HAL is in a sweet spot as the business has high technology entry barriers. So not all the stocks are doing rudimentary stuff. Some of them are doing stuff that maybe even global MNCs might not be able to do in the Indian context, right? Then look at the order flows. I mean, BEL, I've not used BEL in the valuation metric, but BEL received an order worth 3,200 crores recently. The cumulative orders for FY25 alone are 4,800 crores, and the order book is at 76,000 crores. I mean, that is stuff which is quite crazy. Cochin signed a pact with Wilson ASA for 1,100 crores. Garden Reach Shipbuilders, total order book now has reached 23,000 crores. And the book-to-bill ratios for some of these stocks, and that graphic will come up on your screen, are very, very impressive now. I mean, it ranges between 3 times to 6 times. So 3 times for Zen Technologies, but for some of the others, like GRSE, it's 6 times, Cochin Shipyard, it's 5 times. There is visibility, there is execution, there is the government push towards indigenization, and with that scale, they have the ability to export as well, which is what Defense Minister Rajnath Singh was saying on the first day or the second day of the new government getting formed.
So the question has always been, and you say that there is execution. It's great that they're getting orders, but the question that one will ask from the other side of the fence is, and someone that has missed the bus. Okay, let's talk about those people. We'll say, hey, is this translating into massive revenue growth yet? Has it?
So there is revenue growth, yes, being seen already. But the other aspect, Alex, is one, yes, revenue growth, but two, the quality of growth. So very often the defense stocks have been lambasted because you're like, they are sure they may grow, but the quality of the earnings not necessarily the best. I just decided to look at the return ratios. I took a simple metric, return on capital employed, right? The last reported return on capital employed. And the 4 stocks that I'm talking about, right? This is not indicative of the entire universe. Some may be better also. Yeah. But Zentech, ROCs, take a guess, 46%. ROC, HAL, 39%. GRSC, 28%. Cochin Shipyard, which is the lowest of the 4, is 21%. So, granted, you can't give these companies, the argument is you can't give these companies consumer valuations. Yes, I'm not saying that. Right. But these are very impressive return ratios. There is visibility of growth. There is order book which is 3x, 4x, 5x. They are executing well. They are getting ring fenced by virtue of the fact that there is indigenization push. There are a lot of things going for them. So, my limited point is, I'm not echoing that people should go out and buy them at these valuations. Who knows? But the people who are buying these stocks are buying them with very good reasons.
Okay. Last question. What could
I may not have the answer, but yeah.
You may not have the answer, but it's an important question to ask nonetheless. What could be the fly in the ointment?
Yeah, I mean, currently the fly in the ointment is the valuation. It's, always the reasons follow a crash.
Right.
When the stocks come down, as they will at some point of time, when the stocks come down, people will put out all these reasons that yes, the quality of earnings was good, but what were you bidding for? FY27 earnings? Why should you do that when there are other sectors like chemical, pharma available? That is what will happen.
Sure.
But this is the same argument, Alex and Harsh, that came in about 1 month ago. And since 1 month, some of the stocks have gone up 30%. So you are crying if you missed out on those stocks, or if you were invested and you got out of them. And some investors have come and confessed that they got out of these stocks and the stocks have gained 50% post that as well. So, it's a brave man to get out of defense stocks currently, really.
Very true.
Or a brave woman.
Yeah, very true. All right. So, but let us know what you think. If you've been holding on to some of these stocks, something like a Cochin Shipyard, did you buy it about a year back? If you did, then you must tell us in the comment section. We've got lots lined up for you. It is, remember, options expiry day on the Nifty 50. And so we've got specific cues to tell you about after the break. To stay tuned.
Yeah. You want to take a break without telling our viewers about the Indian cricket team's journey?
Oh, of course. Okay, I must have missed the cue. If you didn't know already, the Indian cricket team, the winners of the ICC T20 World Cup 2024, have landed in New Delhi. They will make their way to Mumbai. Their journey from New Delhi to Mumbai is going to be less complicated than the one from Barbados back here. It was in Barbados.
Yes, it was.
It was in Barbados, and because of the cyclone, it was delayed. But there's going to be a party in Mumbai in the evening today, and there are several roads that have been or will be cordoned off. So it's something that you want to bear in mind, either if you want to join the party, or in fact, if you want to get to work or get home. So bear that in mind.
Bear that in mind. And currently at ITC Maurya Hotels, where a special breakfast has been prepared for them, after which, as Alex said, they will of course head to meet Prime Minister Modi at his residence and then eventually come in the evening for the grand party. So it's something that all of us are waiting for with bated breath. The cup is home.
The cup is home. All right. Indeed. Again, so let us know what you think about
Welcome back. This is India Market Open. We're taking stock of the futures and options space. It's turned out to be another good trading session yesterday, especially when it comes to the bank Nifty. Well, conquering 53,000, remaining there, and on the back of the leader, HDFC Bank. The question really is, can we expect more strength to come through? Well, before I get in our expert for today, let's take a look at how things have in fact panned out yesterday. So when it comes to the Nifty, of course, it was a day in the green. We did see the Nifty advance by around 0.7%, but not as much change in open interest. The bank Nifty, on the other hand, was a completely different picture, where we in fact did see the underlying advance by around 1.8%, whopping 14% added in open interest for the July futures, even as we start seeing more longs building into the system. The big takeaway, the Nifty Bank closes at 53,000 and above. Well, moving on in terms of the options market, remember that today is the weekly options expiry, and that's what we're going to talk about. So if you just look at the overall open interest distribution picture, at the moment, a trend that has been coming through is the further cementing of the 24,000 put, or rather the 24,000 level, considering the kind of open interest that we've seen around that mark in terms of puts. Well, moving on the higher end, we have a little bit more writing around 24,500, 24,600. So we're looking at a rough 500 to 600 point odd range in today's day of trade as far as the Nifty is concerned. Do remember that it being the final day of the weekly option expiry, well, the premiums may not necessarily be very high, considering we have seen volatility come off by quite an extent, which does make selling options a little bit of a risky bet in today's day of trade, at least as far as the Nifty is concerned. But let's move on and talk about stocks then. And well, in that case, we have GNFC, ICICI Bank, Shriram Finance, India Mart, all of them looking at fresh longs. Ashok Leyland under a tad bit of pressure, so shorts there. And even among stocks which are seeing unwinding, we have short covering in a whole lot of counters, which would include something like Enipca Labs, Tata Consumer, and even something like a Biocon. So keep an eye on these counters. But let's take this conversation forward and see what our experts have to make of these markets. Well, we have Rahul Ghosh of Hedge.in who's joining us on the show. Rahul, good morning. Thanks for joining in. Let's start with your view on the Nifty. What's the way forward, and how are you assessing things here?
Good morning, and thank you for having me. So our view last week around on Nifty was that the room on the upside is frugal, or there's not much room left on the upside. And that's why, if you remember, we planned a butterfly where we had 24,200 long and we shorted 24,500. That trade is in a small profit as of now, with, of course, a lot of time to play by. That is the exact same view we keep even this week. The upside is limited. We don't know how limited, but better than predicting whether it's 200 points or 400 points. It's always better to form strategies where if the market continues to go up, you tend to make money. If the market stays sideways, you tend to make money. And if the market goes down, you don't lose much money. That's the best thing about options. We continue to hold status quo on that view.
Okay, Rahul. So that's as far as the Nifty is concerned. But I believe when it comes to the bank Nifty, you actually have a recommendation on an option structure you can deploy. Can you take us through that and the reasons why?
Sure. So similar structure as compared to our last week trade on the Nifty. Also wanted to mention to the viewers that we had mentioned Dixon Technologies a couple of weeks back, which would have given about 7,000-8,000 rupees in profit in the structure, the simple bull call that we had created. With respect to Bank Nifty specifically, we are forming a butterfly, but slightly different because we are taking a close by expiry first. It's important that viewers get different strategies and different hands of strategies. So we thought we'll plan something different this time. What we're doing is we're taking the 10th July expiry and forming a simple bull call first with using the 10th July expiry. Current Bank Nifty price spot is around 53,000. We're taking the 53,700 and 54,000 call of 10th July. So we are buying the 53,700 call of 10th July. We are selling the 54,000 call of 10th July. The next step, if this bull call does not work out, if Bank Nifty does not stay bullish, how do we combat this? What we're doing is we're selling the 55,000 call of 31st July expiry. And to hedge that extra sold call, we have the 55,500 call of, we're selling the 55,500 call of 31st July And to hedge that call, we are buying the 55,200 call of again 10th July expiry. So I'm repeating the strikes once again. We are buying 53,700 10th July. We are selling 54,000 10th July. We are selling 31st July 55,500, and we are buying 55,200 call of 10th July. Now, if you look at this structure prima facie, if Bank Nifty goes up before or on 10th July, the structure makes money. Absolutely no questions asked over there, which is about a week from today. If Bank Nifty goes down from this point, the extra sold call of 31st July will ensure that the debit in my initial bull call spread is taken care of. So that's why if you notice, the risk in the trade is only rupees 1,000. It's a very interestingly planned strategy using multiple expiries. The third part of the strategy is that if Bank Nifty moves up slowly, in that case, what we would have to do is the 10th July bought call to hedge my sold 55,500 will have to be rolled over to the end of July expiry once again. That would be the modification in case Bank Nifty moves up slowly.
All right. So as Rahul has put this is actually in two parts. The first part is a simple bull call spread. And along with that, what Rahul is also doing is that he is selling a 31st July, far out of the money call. And against that, he is also buying and a 10 July call, so as to compensate for any just to make sure that the risks are within limit. Now, based on that, I believe that the horizon for this particular strategy will be 10 July. Please correct me if I'm wrong. Are there any adjustments under any circumstances that you may be looking to deploy?
You're absolutely right. So ideally, we are expecting this to play out by 10th July. But the condition by which it won't play out by 10th July is if markets move down sharply or stay at the same range. What happens in that case is that my 55,500 call of 31st July will kick in and will act as a savior to the loss happening in the bull call spread. The only time we would require an adjustment is if Bank Nifty moves up slowly. In that case, what we would do is we would let the 10th July expiry, all the legs expire at whatever price they are on that day. We would roll over the 55,200, which is of 10th July to the end of July, and it would become a simple bull call once again. Right now, the structure is a bull call and a bear call put together. We would change it on 10th July to a simple bear call, keeping the 55,500 leg as it is.
There you have it. That's what Rahul is looking to deploy as far as the Bank Nifty is concerned at the moment. Rahul, on that note, taking a moment to thank you for joining us and taking us through your views on the markets, and also taking us through this strategy, this option structure that we can deploy. And of course, remember that this is across two expiries, not just one. So that's something that you need to bear in mind. But with that, it's over to you, Samina.
That seems like it. The markets, like Rahul said, too difficult to call it a top, so best to play with an option strategy where the downside is capped if the markets move lower, and of course if it's sideways or upward, you stand to gain some money. The implied Nifty has eased off a little bit, still expected to see a gap up, but a morning of gains and a second half of profit taking is something what could potentially happen. It's also weekly options expiry, so you want to keep that in mind. The markets will remain fairly volatile. The street will be all about quarter one updates from Bajaj Finance to L&T Finance to Bandhan Bank. We'll add a few more to the list, which are outside the banking names, the Vedantas, the Brigade Enterprise, Persistent System, which of course had that deal announcement yesterday, but follow-on buying could not be ruled out in today's trade. GE, T&D, which saw an order win, could be another one to track. But we've got some more details on that as Puneet is standing by with what we should be keeping an eye out on. Puneet, help us through this. What are the top stocks that the markets will be watching out for today?
Well, yeah, that's right. Quite a few you named, and we'll just look at a few which potentially might move in trade today on the back of their corporate as well as Q1 business updates. Let's start with Vedanta first. They've reported the aluminum production, which is up 3% in this particular time frame at 596 kilotons. They've also the zinc production is also up by 1% on a year-on-year basis, coming at roughly 262 kilotons, while the saleable steel production has gone up 10% year-on-year. The other one that we're looking at is Castrol. Now, the company has raised roughly 125 crores via QIP. They have allotted roughly 15 lakh shares at rupees 796 per share, and they have released, the allottees in this particular one, which DSP Small Cap Mutual Fund is the biggest, which has roughly 50% of this 15 lakh shares that has been allotted. Other investors that have, subscribed and got allotment in this particular QIP are Ohana India Growth Fund, Society Generali, and LC Faris, which has got roughly 20, 12, and 11% respectively. When you look at the banking names, all of them have reported decent set of quarter one updates. Let's start with L&T Finance. They've reported portfolio retailization of roughly 95%, which effectively means that the wholesale book has been run down a lot and from a very high base which it had in the previous couple of years. They've also said that disbursements in this particular time frame have gone up by roughly 33% to come in at roughly 14,800 crores, while the total retail loan book has now reached a whopping 84,000 crores, which is up 31% on a year-on-year basis. The next one that we're tracking is Suryodaya Small Finance Bank. Now, the gross advances they've reported is up 42% in this particular quarter, of roughly coming at roughly 9,000 crores. Deposits have also gone up by a similar range to come in at roughly 8,100 crores, while CASA ratio has dipped to 17% on a quarter-to-quarter basis. So we'll be looking out and watching out for more details on that. And finally, Bandhan Bank, loan advances up 21%, crossing the 1 lakh crore mark. Deposits have also grown by 22% at around the similar range, and CASA ratio has also dipped here to come in at 36%, as a lot of money has been moved to long-term tenure FDs, taking advantage of the high rates. So these are some of the few stocks that could potentially move in trade today. Back to you.
Oh yes, Puneet, and if the breadth is positive, you will see a lot more activity in terms of the stock movements. But it's going to be an interesting morning. Remember, the markets have been making higher lows, and that is what seems to be adding conviction, in addition to the fact that the VIX is lower and the PCR is higher. Aditya Shah is now joining in with a fundamental view on the markets. Aditya, it's looking like it's going to be a good start. Nothing globally is bad in that sense. Domestically as well, we've been talking about an impending correction all the way back from November 2023. We've, of course, moved up 12-14% since that. Do you feel like the better way to approach your portfolio is to take some money off the table and stay on the sidelines, or remain fully invested?
Good morning, Samina. So we don't feel that we should take money off the market. There could be a correction in the market. Of course, there can be. A better strategy could be to stick to the large cap side of the market and to check where the real frauds are. In our opinion, the real frauds are somewhere in the defense sector, somewhere in the energy sector, where renewable energy companies are rising very sharply, or somewhere in the IPOs where companies are giving stupendous returns. So that's where the real bubble is. You need to check it very, very carefully. The small and the mid cap side of the market, of course, stocks have risen, but some of them have also risen on the back of earnings. So my perspective is a little bit of large capish bias to your investments right now at this stage. Do not venture out into poor quality companies which are not backed by solid businesses and cash flows, and try to stay invested in the market without without taking too much risk within the small and the mid cap.
Aditya, FIs have obviously turned very bullish on the financial sector. In fact, they've bought shares worth 8,000 crores in the second half of June itself. So in 15 days, the FI money that's come into the markets has been significantly drawn towards financials. And I'm guessing those are the frontline HDFC, ICICI banks. How do you feel about the financial sector? Bank Nifty is at its record high, but the leadership keeps going from PSU to private sector, and it's also very tough to call out where the value remains because each and every bank is so different from the other.
Definitely, as I had said, large private sector banks will now take over the leadership of the market, and that's exactly what is happening. We've seen HDFC Bank rising by about 10 to 12% in this month or in the last month. And we've also seen ICICI Bank, Axis Bank, Kotak Bank, and SBI will take the lead over. So my perspective is PSU banks will also do well over the period of next 1 year, but the tide will now shift from PSU banks to large private sector banks. And of course, if FIIs want to come and invest in India, banks are the most liquid stocks that they can really invest in. So I'm really positive on the larger private sector banks, as they have not done anything for the last 2.5 years. And we are already seeing from the updates that most of the banks are really giving. For example, Bajaj Finance has an AUM growth of about 31%, which is really very good. I expect other banks to also come out with decent set of numbers where the loan growth will be anywhere between 15 to 20%, and the deposit growth will also be somewhere close to 15 to 18%. So my view on the financial and the private sector banks is really positive. More positive on the larger private sector banks, then PSU banks, and then the smaller private sector.
We also have Shrikant. In fact, just to add to that, Aditya, it's the big brokerages as well. I mean, Bernstein should be given credit for this. They've been indicating that Indian banks have had a strong balance sheet from the start of this year. Of course, the stock prices were not keeping up with that, but they had indicated that. Recently, CLS has also highlighted that the private sector banks have a much stronger balance sheet today than they have had in the last 5 or 10 years ago. They've got a Bank of America's got a buy rating on HDFC, ICICI Bank, Axis, Kotak Mahindra Bank on hopes of strong earnings and valuations. So all in all, it seems like the tide is in favor of the frontline private sector banks. Shrikant, before I take a view from you on the Nifty, you want to come in on Bank Nifty and your top pick in the Bank Nifty space.
Good morning, Samina. Good morning, everyone. I think, Bank Nifty was underperforming since last almost 4-5 days. After hitting the levels of 53,000, we saw a good amount of correction, somewhere close to 52,000 levels. But from there, all the way it recovered back to the levels of 53,000 under the leadership of HDFC Bank. And closing above the levels of 53,000, it's something which is positive for it, because then again it entered into higher top, higher bottom series. Along with that, we saw buying interest in State Bank of India, Axis Bank, ICICI Bank was also holding above its important support levels. So based on technical formation, now the next level to watch out for would be around 54,000, but in between 53,500 going to act as resistance, because there we have huge amount of call writing, and today it's a day of weekly expiry. So close to 53,500, we could see the levels of Bank Nifty. And in case if there is any correction, then 52,800, 700 going to act as support for it. From the, if we go through with the broader space of the market, then number of stocks did well, even though there was hardly any major activity in terms of percentage gains on indices. But yes, the broader market is really good. From the bank space, we like State Bank of India. The reason is because after a very long time, the stock is forming some reversal formation. It is holding comfortably above the levels of 820, which is positive. Based on its technical formation, we could see the levels of 870, 880 in next 1 or 2 days of time. So it's a positional call. The reason is because the stop loss is a little bigger. So we have to keep stop loss somewhere close to 820 for it. And the other stock which we like is Bharat Electronics. And I think you must have seen yesterday, there was good amount of buying interest in almost all the defense stocks. In that space, we like Bharat Electronics. It is above the levels of 310. The next level based on its retracements around 330. And we can keep stop loss 303. We also like Hindustan Aeronautics. We also like Bharat Dynamics. But most of these stocks are very far away from their important support levels. So risk reward ratio is favorable for Bharat Electronics. I think there we should look for taking long position.
You're right. Those stocks are in a universe of their own. Shrikant, you talked about your classic banking names, but I'll of course go to Aditya as well in the fundamentals of this. But what did you make of that very strong performance in terms of business update from Bajaj Finance? And I'll add L&T, Bandhan and Samvardhan Bank to that as well. So if you want to just tell us holistically what you thought of this space and how would you trade Bajaj Finance today, Shrikant? In terms of the charts, which one is looking most promising?
Suber, I'm very sorry, I can't comment on Bajaj Finance. The reason is because it is into restricted list of Kotak securities. But yes, what I can tell you is that the overall NBFC space is showing a lot of strength, momentum, and whenever there is momentum, we see upward rally in the stocks and the entire basket. We like number of stocks, but in that specifically, We like AB Capital as well as we like Mahindra and Mahindra Finance. I think both these stocks are very close to their resistance level. We could see some more sideways correction. The reason is because the anticipated rate cut is still not there. But I think the market is discount a lot of things well in advance. And I think after these particular specific updates from number of NBFCs, I think we could see for further more activity in the market. But yes, Bandhan Bank is also showing some strength. After a very long time, it has broken the level of 200. So Bandhan Bank can also do well in the near term. We could see the levels of maybe 230, 235 on the high side.
Excuse me. And yeah, well, that's a fair argument too from Shrikant's end. The other set of stocks which have done really well in the last couple of days are the real estate names. Actually, not just the last couple of days. Maybe yesterday a bit of them cooled off. But Aditya, from the Godrej property to almost everything else went up in trade day before yesterday on updates that have come in thus far. Now, I'd love to understand from the recent announcements and the valuations that they are trading at, where within this real estate bucket do you have the highest conviction on?
So Niraj, what is happening is the real estate cycle has really turned, and inventories are getting sold off, and we are sitting at a 5-year low inventory in major markets like Delhi, Bombay, Bangalore, and Chennai. So that cycle has turned, and now after a long time of developer consolidation, things are moving forward. Having said that, a lot of these stocks have already priced in this upcycle. So it is really very difficult to now invest in the real estate sector. As I said last time as well, my top pick within this sector will be towards quality, and there's none other than the Godrej Properties, which is a very high quality stock. Then you can move on to a Oberoi Realty, or you can move on to a Prestige Estate. But my topic within this sector continues to be Godrej Properties. Their projects within Delhi and Bangalore, together with their presence in Bombay, is really helping them out. The topic would be Godrej Properties, but I would like to caution investors that the valuations across the sector are not really cheap.
Right. You want to talk about Brigade Enterprise, Aditya? Don't know whether I'm sorry if you mentioned it, but they've also had a lot of activity. This morning we've woken up to reports that they're developing a pretty massive land with the gross development values upward of 1,000 crores. So fundamentally, how does Brigade look?
Brigade is also a good stock to look at. However, within the pecking order, I would look at number 1 is Godrej, number 2 is Oberoi Realty, number 3 is Prestige, and number 4 would be Brigade Enterprises.
Shrikant, you have a view on Brigade very quickly. There's a fundamental news trigger this morning. Usually stocks do react to the new projects.
Yeah, I think Brigade is also showing continuation formation after the rally towards the levels of almost 1,300 from the levels of 1,100. It is forming some consolidation sort of formation. But on this particular, after this particular news flow, we could see breakout sort of formation. And in that case, the chances of hitting 1,450 or 1,500 would turn bright. But from the real estate space, we like DLF. It is around 840-45 levels. It is forming some rounding bottom formation on monthly, quarterly basis, which is extremely positive. Based on only technical formation, we could see the levels of 1,200 in next few weeks or months. So it will take time, but it's a positional call at current levels. Based on fundamentals, we are expecting 930, 950 sort of levels. So I think based on fundamentals, based on technicals, DLF looks very attractive way to buy at current levels.
Right.
Okay. Let's slip onto a break. We talk about some of the other active pockets on the other side and the pre-open rates coming up. Stay tuned.
Welcome back. You're watching India Market Open. A quick check on implied Nifty before we go over to our guests to talk about their stocks and sectors that they currently like. Implied Nifty is indicating a gap up of 100 odd points. Asian markets aren't doing too badly, so that is a trigger for our markets this morning. And it's also weekly options expiry of the index, so that's what you want to keep in mind. Barring China, rest of Asia is looking fairly well placed. In terms of some of those big movers that we've seen in trade, on the gaining side, Shrikant, yesterday Castrol did quite well. It was up about 14 odd percent. Anything on this on the stock? Have you been tracking Castrol closely? It was also quite healthy in terms of volumes.
Yeah, Castrol is showing a lot of momentum, a lot of strength. In fact, the stock has spent nearly 10 years. It remained down into downtrend from the levels of 270 to almost 105, 110 for last 10 years, and now it is recovering back from those levels. So I am of the view that it is going to surpass its previous high, which was around 270 levels. The current volume pattern as well as the overall price retracement is suggesting us that we should be buyer if there is any correction in the stock. Above 270, the stock can move to the levels of 300. So it's a very long corrective pattern that we witnessed, and after that, the breakout is also equally stronger. It's a very strong candidate to buy and hold with a medium to long-term view.
You know, Aditya, two stocks that have been been in the news have been REC and PFC. Of course, they gained quite well a day ago because you had Bernstein that's initiated coverage on them. They've obviously said that they're very enthusiastic about these stocks and they are, of course, constructive on them. Do you feel the same about REC and PFC? Where does your bias sit?
So what is happening within the power sector? The government is making massive changes, and because of those massive changes, both PFC and REC are gaining out of it. So 18 to 20% growth as PFC is guided over the next 2 to 3 years bodes well for the company. However, the stocks have risen massively, and I will be very careful not only on PFC, REC, but the entire PSU pack, because at the end of the day, government is the promoter, and the government will try to milk out all of these companies. We are in a bull market, and I feel that a lot of PSU companies have risen way beyond comfortable valuation. So one must be cautious. If one has these stocks, they can continue to stay invested, but I will not suggest any new entry into any PSU stock as of now.
Which PSU stock, Aditya, then you would initiate fresh positions in at the current market price?
None of them.
Anything in the private sector that you like, across the board, sector agnostic?
No, as I said, within the private sector, you look at places where there's no rally, there's no traction that the market has generated. So the large private sector banks or the chemical space or the pharma space or some bit of it within the FMCG space is what you should be looking at. We are trying to look at places where the market has not concentrated on, and the valuations are relatively cheaper as compared to the other side of the market.
Right. Shrikant, what about you? Do you feel the same about REC, PFC, or do you feel like one could initiate a long position today because yesterday was a day of weakness and a bounce back, really just an intraday call on REC, PFC of maybe till the weekend, which is yet tomorrow?
See, like all these stocks are trading above their important levels. I mean to say, even if we go through with its fundamentals, then they are like extremely expensive. We have not seen this type of multiples and fundamentals for the company. But based on technicals, where we most of the time give more weightage to the overall price and momentum, I think based on that, if we see the pattern, then it is heading for the levels of 600 in next few days. It will take some time, but gradually the stock is moving upward. In fact, on the day of election results, it was the first stock which recovered from its lows quickly as compared to other PSUs. So yes, there is like buying interest, and based on its technical formation, on immediate basis, we could see the levels of 560, 65. I think it is opening around the same levels, but the eventual targets for it is around 600. I think it is better to focus more on PFC as compared to REC because relatively PFC is doing much better.
Okay, well, as the pre-open it settled down, by the way, keep an eye out for Brigade. Keep an eye out for Solar Industries. That stock is on steroids of another magnitude, by the way. And Cello World, which has launched the QIP, maybe successful closure, but the discount
on Solar returns ex-dividend today, so.
But 4.5% up still. So that's interesting in the pre-open. And Cello World, Cello World, which has launched the QIP.
Despite the discount?
Despite the discount, seems to be starting off well. Let's wait for these rates to settle down. But as we wait for that, let's talk about an interesting note. Now, gone are the days where Indians would only eat food made out of their own kitchen. Long gone, really. I mean, with a slew of options to choose from. A Bain and Company report has found out that ordering is outpacing overall food services. But which age group is consuming more and where is the growth headed? I think a lot of those details, which might have investing implications from a Zomato to a upcoming Swiggy listing to QSRs and more. Mahima has those details. Mahima, tell us about them.
Right, Niraj. So the note specifies that the food service market is expected to grow at a CAGR of 10 to 12%. At present, it is around 400 to 500,000 crores, which will go to approximately 900,000 crores. Now, online delivery is also estimated to grow at 18%. Now, what they're saying is that overall, the food market will benefit the QSR space as well as food delivery platforms like Zomato and Swiggy once it gets listed. They're saying that China has 4 times the number of restaurants per million urban population as compared to India. So India has a lot of scope of growth in this segment. It also says that incremental growth is expected to come from tier 2 cities. Right now, the growth is coming from tier 1 cities. And the population that is targeted at present is the Gen Z population and younger cohorts because they comprise almost 40% of the overall consumption of online food ordering. And they're saying that eating out also for Indian consumers is not an everyday event. So on an average at present, it's almost 5 times a month, which will go to almost 7 to 8 times a month by 2030. And this could definitely benefit QSR stocks like Devyani, International, Westlife, Jubilant, Sapphire, etc. And also food delivery platforms like Zomato and once Swiggy gets listed. So this is the overall view of what the note is saying.
Okay. Well, it's a wide bucket. Now, since Aditya is not looking at PSUs, let me ask him if he likes QSRs or food delivery businesses or others. Aditya, is there a first amongst equals here?
Yes, I do like the QSR space. Zomato has grown pretty well, but the valuations there are extremely aggressive now. So would like to avoid Zomato as of now. Then within the QSR space, somebody like Burger King, which is restaurant brand Asia, or somebody like Domino's. Those companies look really very interesting. Over the next 5 to 10 years, these companies will have a massive growth, or massive headway for growth, and they could grow anywhere between 20 to 15%. And conversely, as people eat more and more junk food, pharma companies are the ones who are going to benefit out of it, as 50s are the new 40s are the new 50s, and people's health will start to deteriorate even faster. So positive on the QSR space and positive especially on the pharma space.
Okay, it's an interesting logic. Aditya, someday we'll debate this logic as well. And it's good to have these debates going, but not today. Today there's paucity of time. 9:08 happening out there. And as the pre-open rates are settling down, Shrikant Chauhan, I want to talk about a few stocks which are continuously doing well. Now, Solar Industries, Shrikant, something's happened here because after hitting a market cap of 1,07,000 crores, this stock of 1 lakh crores is just added another 10% very, very swiftly to itself. I think from 10,000 to 12,000, the move has been extremely fast. What do the charts suggest here?
Yeah, Niraj, it is like something which is very difficult to forecast that what will be the next move for the stock, because it was like below the levels of 10,000, 10,500 for almost a month. And crossing these levels actually helped the stock to move higher. But the way it spurted, it's like very difficult to say. But Based on extensions, what I can say is that 14,000, 14,500 should be the next leg of resistance for it. And correction, 10,500 going to act as support for it.
Niraj and me were talking about how the Cello QIP is coming in at a pretty significant discount of nearly 11% to yesterday's close. What stands out, Niraj, for me is the fact that they must have offered it at a discount because people didn't want to lap it up at yesterday's close. But the stock goes out and adds another 4%. So, like I said, I'm not sure how we're supposed to read all this anymore.
It's just crazy. It's just the appetite for some of the stocks, never mind what's happening, what kind of selling is happening as well, is pretty strong. But, I wonder if there's a fundamental reason for such excitement in Cello world, because it was up 6% yesterday as well. Aditya, fundamentally, do you track Cello?
No, Niraj, don't track this stock, so we'll not be able to comment on it.
Fair call. But I don't think charts have too much of history for me to ask Shrikant about this. But yeah, Samina, it's just very strong move.
600 odd crores from anchor investors, and maybe that could be a cue that retail investors or funds are taking, that there is significant conviction on Cello, and hence the counter is seeing a little bit of cheer this morning. There is, I guess, enough and more reason the stock trades the 4% gain. I want to quickly pull up Wockhardt. It took a break yesterday after a very sharp up move between Friday and yesterday. It's back up on a positive move. 900 rupees on Wockhardt is what we have. Shrikant, I know this one is not in the FNO space, but on the charts, how does Wockhardt look at 900 rupees? Is it attractive?
See, based on technicals, what I can make out is that the stock has formed double bottom sort of formation, and it has validated to it by crossing the level of 750 decisively. So based on its technical formation, there is a possibility that we could see the levels of 1200 or 1300 in next few weeks. It will take some time. But based on retracements, the stock is now very close to the crucial resistance level of 1000. And in the past, I'm to say, during 2017-18, the stock has spent a lot of time close to 1000 levels, and from there all the way it fell to the levels of 200 or 150. So 1050 is going to act as resistance for it. I am of the view that we should be careful for adding this stock at current levels. Yes, if there is any correction, then close to 800 levels we should look for it, but at current levels it is certainly avoidable.
Levels avoid it is the word coming in. The stock is building on some more strength, up about 1.5% in pre-open trade. E-Clark Services is expected to see a little bit of a gap down. Remember, the stock trades ex-date for buyback. Hindustan Copper and India Cement remain in the FNO band. Indus Towers is out of the FNO band, so you will see a little bit of movement on Indus. Vodafone, of course, and Bharti Airtel also seeing some traction yesterday, so that may continue into today's day of trade as well. But apart from that, I think largely speaking, it's a quietish morning with a positive bias. And banks may see a little bit of a gap down. So it'll be interesting to see who takes leadership in terms of sector performance in today's day of trade. It could be IT, and it could be some of those non-banking NBFC names that will be in focus. But Aditya, as we are gearing up for trade this morning, how are you talked about how you feel like chemicals may be proving to be a good space to add allocations to. What and where would you add that exposure to?
First of all, for the chemical space, we will only see a good leg up within the business only in the second half of this year. So maybe by the end of this year or early next year is the time when chemicals will start to do well. Within the space, within the fluorination space, you have somebody like a Gujarat Gas, which is concentrating on the EV side of EV battery side of things. So that looks really very good. Something like Naveen Fluorine, which is in the refrigeration space and looks very interesting. Then you can move on to somebody like a Deepak Nitrite, where the stock has hit a lifetime high yesterday, and the phenol prices are now slowly and steadily starting to recover. Somebody like an Aarti Industries also looks very interesting. As the phenol and benzene prices start to recover, this company will start to benefit. So chemicals is a very individualistic and heterogeneous space where you have to look at chemical by chemical and then take a call. However, on the broad basket, I am really very positive. You need to pick up 3 to 4 companies here which have done a lot of capex over the last 2.5-3 years, and then they will reap up the fruits over the next 1.5-2 years. So within the fluorination, within the phenolic space, within the rubber players, somebody like an Apcotex Industries looks really very good. So these are the companies to look for in the chemicals.
Okay, post market open, we'll ask Aditya about why Apcotex looks good as well. But we have less than a minute left. So Shrikant, time for one question, 30 seconds. What is your top call for the day today?
I think apart from this other indices, metal space is showing some strength in that Steel Authority is showing some interesting formation. It is around 153 levels. I am of the view that again the stock is moving towards the levels of 160, 165 at least in the near term. So close to 153 levels, look for adding positions with a stop loss at 148. Again, if we go through with the international prices of iron ore, then there also we are seeing some strength. So broadly, I think Steel Authority should do well in today's date.
All right, so that's sale. Watch out for that one. Aside of the other calls, metals look strong to Shrikant and therefore he's recommending sale. Let's see how the metals start off in the session today. We need something to fill the void of leadership that banking might be leaving today. Let's see if it does. But here come the first rates this Thursday morning on a day when the global markets have done really well. But maybe we preempted some of those moves. About 0.2% higher. Nothing great, nothing extravagant, just about okay. Banks flattish. Nifty IT and Nifty mid cap and small cap indices will come up on your screen. Nifty IT 0.5% higher, so IT is certainly coming back after a bit of a pullback yesterday. Mid caps are up about 0.33%, better than the Nifty. And the small cap index is up 0.5%. The small caps are really piling on the gains in the session today. Let's get the heat map up on the screen, see what's moving in the green. ICICI Bank, yet again. The top draw yesterday was up 2%, nearly 2%, or rather 2% from the lows of the day, up about 1%, adds another 1.5%. There is strength in Hindalco, there is strength in HCL Tech, Tata Motors, TCS, but IT you can largely see with HCL, TCS, Wipro and LTI Mindtree. IT is right up there, Wipro too, right up there in terms of the list of gainers. Bajaj Finance doesn't have a massive reaction, I must say, but it's in the top 10, top 12 kind of gainers, 0.5%. Nothing too great on the numbers that it gave out, but a lot of green, very little red. HDFC Bank immediately pulls back. Over a 2-day period, ICICI Bank has actually matched HDFC Bank in terms of gains, despite the fact that it's HDFC Bank which will essentially gain the flows from the MSCI weightage going up. That shows the strength in ICICI Bank. But Shrikant was right, Samina. Metals are singing a song. Hindalco is the top gainer. Tata Steel is in the list of the top 10 gainers too. So it's IT and metals which are taking over from the Bank Nifty, which is sulking predominantly because of HDFC Bank.
That I made as well. IT, it had to be, right? Strong global cues, a weaker dollar, expectations of a rate cut, all that is really good for anything that's global facing, and metals and IT are usually the top favorites. Pharma comes as a third because that also has a significant exposure to global markets. So those are three sectors that will be in focus. Anything with an exporter, the exporters kind of frame or dollar related usually see some buying. So as expected, IT sector and metals are doing quite well in today's trade. Niraj just talking about how ICICI Bank and HDFC have been the duo. ICICI Bank's performance over the last 1 or 3 to 6 months has also been significantly higher than what HDFC Bank has done, and that's also reflective in today's performance. Broader markets doing slightly better than the benchmark. It could be, remember, a day of profit taking. So don't be surprised that if we see a gap up, but actually see some weakness in the second half of trade. We did make a record high yesterday, and you want to be careful and mindful about that too. In terms of stocks on the Nifty 500, pull up Bajaj Finance, L&T, Bandhan, Bandhan Bank. These are the banks and NBFCs that have reported on very strong Q1 updates. The markets, though, not rewarding them surprisingly. Bajaj Finance, we were quite excited this morning that their AUM had grown 31% YOY. They resumed a lot of activity which was restricted by the RBI. Bajaj Finance has seen a marginal gap up, but it may build on those gains as we go along through the day, as the markets digest this news and see some emerging buying in the stock. L&T Finance has also done well. That, of course, so real business activity go up. So L&T Finance up about 1.5%. Bandhan and Samvardhan also did okay. Bandhan Bank, though, reacting negatively to the news flow. It's down about 1%. Surya, the bank, which is a standout in terms of Q1 updates, is seeing a gain of about 4%. In terms of other stock movements, Cello QIP, the QIP comes in at a time at a discount of 11% to yesterday's close. Remember, this was a very recent IPO, so listing is recent, so the QIPs come in quite quickly as well. Even though it comes in at a discount, it gets lapped up, I guess, and that's probably why the stock is up 5% in trade. Brigade Enterprise, we said that this would be a mover this morning on back of that gross development land bank that they've acquired to the tune of 1,100 crores. You've also got Solar Industry that continues to trade even though it goes ex-dividend. You've got E-Clarks in focus. The stock should be seeing some selling. It's, of course, turns ex-date for its buyback. So that stock is down 1.5%. But that's the day, Niraj. It's not a bad morning, but no significant trend to just state and no major winners in today's session. 3 to 5% gains seems to be. Is that any different from what you say? Because you've got that smirk on your face.
Mark Wockhardt, Samina.
Distracted. Wockhardt, if you want to pull that one up, there's no news on it, but we've been talking about it, tracking it.
Card if we can, with the markets being at new highs. 8.5% for this one. It's 962. I tell you, if a stock is on steroids, it is this one. 962 and counting. Really, really strong show for this one. So good going for Wockhardt in the session today. Some of the yesterday's winners, so Zen Technologies, which was up about 10% in trade yesterday, should pull up that one also for you. Up another 2.5%. There was HAL, Mazgon Dock, Cochin Shipyard, GRSC, just pull those up very quickly. There is Hutco, which was amongst the top gainers yesterday. Mazgon Dock is up 3.5%, by the way. Cochin another 2.5%. So defense and shipbuilders have a decent outing. Hutco 4.5%. So really strong show for that one too. Inox Wind is up about 5%. So keep an eye out for that. As we speak, Wockhardt is up 10%. This one has just gone off the charts like anybody's business now. Shrikant, sometimes stocks just move up in a dizzying fashion. I think Wockhardt is that in the last 7 days. I mean, do the charts suggest any kind of topping out?
Niraj, what you said is absolutely right, that it is really going good. But thing is what, price knows a lot of things well in advance. And if you just go through with its monthly pattern, then after hitting the levels of 200 twice a time, it recovered sharply and it has validated to the, double bottom formation by crossing the level of 750. So based on its technical formation and the patterns which we read, the next count for the stock, it's somewhere close to 1200 or 1300 sort of levels. So broadly, I think this stock is going to do well in the long run based on its purely technical pattern. But it is now very close to the important resistance level around 1000 on which we discussed. And in 2017, multiple times the stock managed to cross the level of, tried to cross the level of 1000, 1050, but there it failed. So at these levels, we need to be a little bit careful because there we could see some consolidation sort of activity between 1050 and 800. But eventually, I think the stock is going to move higher. That's the overall view.
Aditya, how do you buy something like this? I mean, and you would have seen the announcement, you're constructive on pharmaceuticals, you yourself mentioned. What about Wockhardt?
So Niraj, how do you buy it? You buy it when the stock is consolidating for many, many years and then it breaks out. Now they have got a clearance for launching up of a cancer drug, and that's why the stock is breaking out after many years of consolidation. In my opinion, I don't think that the stock is now going to stop, and the stock might as well reach 1,000 very shortly, and then move on from there.
Wockhardt. There's no stopping this one. 860. There were analysts to believe that it was looking a little stretched at 960. I wonder what they have to say. But for now, it's good going on the stock. Remember the target audience for WCK 5222 stands at about 25 million. So it's a huge market you're talking about, and hence the euphoria on that segment. 8% on Wockhardt is what we have. Well, a few other names that are looking okay in today's day of trade. So the Nifty is trading with a positive bias, but it's up only a 50-point gap trade. The breadth, though, is actually pretty good on the Nifty 50. On the Nifty 500, we've highlighted a few stocks that are doing well. But if you just build onto that list, it's once again, like Niraj said, the docs, right? So Cochin and Mazagon, this comes in after both those stocks were up 8 to 9% in yesterday's day of trade. There's no trigger this morning except the fact that it just looks euphoric. Inox Wind is up 4%. You've got Lloyd's Metal not doing too badly. Brigade, like I said, is up 3.5%. Pharma is not doing too bad either. So stocks like Lupin are trading well in today's session. All Cargo Logistics is up 2% as well. Shrikant, Reliance Industries, last week's up move was largely backed by RIL. How does that one look on the charts? Would you buy this for the rest of the July series?
Yeah, I think if it corrects back to the levels of, let's say, 3,100, I'm to say 3,050 or 3,070, below which the stock has spent almost 2-3 months, then there we should look for taking long positions on the Reliance Industries. The reason is because it has spent a lot of time below the same, and it's a very clear technical breakout. Based on retracement extensions, the next level to watch out for would be around 3,300 for the stock. Fundamentally, also, a lot of people, they are expecting the target of 3,200. So close to 3,300, we could see the levels of Reliance Industries in next few weeks. But yes, the buying is advisable if there is any correction in the stock.
Right. Cochin and Mazagon docs are standout trades. Both of those, Shikha, now this is going to be a tough one, right? I'm going to throw googly at you. Garden Reach, Cochin and Mazagon are all up 4%. HAL and BDL are trading soft. Do you feel like taking a cue from these three, HAL and BDL could play catch up today? And if yes, should a trader buy it? It's not in the F&O space, I understand, but does it seem like this one could pull out another 8 to 10% from its bag, from its hat?
Yeah, these two stocks are also not stopping. They are also like just running and crossing their important levels on a week-on-week basis. HL was somewhere close to 3,000 levels from there. All the way now it is at 5,500. But what we see on the chart is like it enters into shallow correction. It spent some 7-8 days within that particular range. And because of some news flow, we see again upward activity or breakout sort of formation in these stocks. So yes, in the morning also we discussed that we like defense stocks, in that our preferred pick is Bharat Electronics based on its technical formation. HAL is also doing well, but it is far away from its support area of 5,200. So there I think we should look for a correction to buy, to enter into the trade. But Bharat Dynamics is also something showing some trend, and we can see the levels of maybe 1770, 1780 sort of levels. There also we saw consolidation below the levels of 1620, 1630 for a considerable period. Now it is holding about the same. So 1600 should be the stop loss for creating any long positions on Bharat Dynamics.
Well, Mazagon Dock, Cochin Shipyard, Mishra Dhatu, I tell you, something's up with these PSUs. The top 4 names are PSU gainers. Then there is a Lloyd's Metal, and then there's a Solar. Again this morning.
Right. That's important to state.
That's a good way to state it. And Lupin, by the way, is up 3%, so that one is doing okay. Privi Speciality up about 2.5% as well. Okay, we need to slip into a break. Gentlemen, both of you, Aditya as well as Shrikant, thanks so much for taking the time out and being with us today this morning. Have a great remainder of the Thursday. We slip into a break on the note that the market is okay with the Nifty IT being the principal gainer, up about 1%. We come back and talk to 3 very interesting corporates out of the numbers, starting with JSW Energy, but move on to Sansera as well. So stay tuned, we'll be right back. Energies made it almost a habit of beating the guidance that they're giving with regards to capacity creation. In effect, the recent biddings that they have done have probably been slightly higher than what the street may have estimated as well. And then they've been on a rampage when it comes to signing of the PPAs as well. So let's talk about all of this just ahead of their numbers, of course, with Mr. Sharad Mahindra, who heads the company currently, to try and understand what's currently happening on ground with regards to the signing of the PPAs and what could happen ahead. Mr. Mahindra, great having you. Thanks for taking the time out. And congrats on a number of factors, really. But I'll start off with the latest news first. The PPAs that you've signed, can we start off with that and then expand the conversation to other factors? Large PPAs signed cumulatively. What went behind these? Are these very remunerative rates at which these have been signed to? And is this a model that you look to follow for the aggressive pipeline that you have?
Yes, good morning. In fact, yes, last 1 week 10 days have been very, very important for us. The bids which we won about 3.6 gigawatt in Q4 of last fiscal, we have been successful in signing the PPAs in last 7 days of more than 2,000 megawatt. And this, out of which about 1,025 megawatt is wind PPA of SECI, which is the power to be supplied to state of Uttar Pradesh. 700 megawatt of solar, which is a SJVN we have signed the PPA with. The power will be supplied to state of Punjab. And 300 megawatt of solar project, which we are setting up in Khavda in Gujarat, which is a GUVNL bid, which the Gujarat state will be taking these power. So in fact, these are, the PPAs have got signed, I will say, at a decent, within the decent timelines, what we expected. It is basically, the reason is that when we went into the bid after a long pause of almost 2 years, that the returns, our benchmark returns, we were absolutely confident that we are going to get, that we are absolutely certain we are getting, and also the kind of tariffs which were discovered. It's a win-win situation even for the states to buy the power, because getting wind power in the range of around 3.65 rupees per unit is a very, very good tariff. And solar, maybe ranging from 2.53 to 2.6 rupees, is a very good tariff which is there. So I think it's a win-win for both when we have signed these PPAs.
Got it. So the total renewable energy PPAs over 2 gigs, if I'm not wrong, done in a week of sorts. And is this the kind of run rate that you anticipate as well? Because a lot of talk around how we are in a peak power deficit year, if you will, calendar year 24, and not enough capacities coming on stream, thermal or renewable, in the next 12 months, or not coming on stream at the pace at which the country may need.
Yeah, you are very right. In fact, if we see the Q1, which has just ended, yes, the power demand growth has been in excess of 11%. Which no one anticipated that this kind of power demand growth will be there over last year. So definitely, and the peak power demand has reached 250 gigawatt. And the capacity addition rate absolutely definitely is slower than the way the demand growth is happening. So, but yes, coming to the pace at which we have signed the PPAs, yes, we have in Q1 also, when 6.3 gigawatt of bidding has taken place, and we have won 30% of that, in April-June quarter, the total capacity in pipeline which we have won through bidding is in excess of 5 gigawatt, out of which 2 gigawatt plus has been signed, the PPAs have been signed, and very, very soon, significant more capacities very, very soon will be signed, and then we will be definitely informing. So we are going because we have the timelines of execution, and we are at the same time the team is ready to execute also the projects in time, within the timelines.
So, Mr. Mahindra, execution is not becoming a challenge for you or for other large partners, but people in the system or in the sector. Execution is not facing challenges. It used to be something in the past. You don't think execution is a challenge, right? Meeting the timelines.
Last, if we see 2-3 years, execution has not been a challenge. But maybe 6 months back only, we identified the way bidding has taken place, the way the PPAs are going to get signed. These executions, not today, maybe 2 years, 3 years from now, can become a challenge, for which we are already doing some kind of backward integration to de-risk our business in terms of execution. So we have identified, this is a very, very important point which you raised, that execution not today, next 1 year, 2 year, 3 years, but going forward, if every year 50 gigawatt of renewable energy capacity is to be executed, execution may become a challenge. So we are already working on that, which we identified 6 months back.
Okay, but you don't foresee a challenge to your timelines and the guidances that you'd given, because I believe you ended at 7.5 gigs?
We ended 7.3 gigawatts.
7.3 gigawatts, okay.
And we will be ending the current fiscal in the guidance what we have given, and the first milestone of reaching 10 gigawatt by FY25. We are well on track.
Okay.
A lot of capacity work, project work is on, which will be reaching that number. And also I will like to state that maybe 2 years back when we said 20 gigawatt by FY30, now with the opportunities which are available and seeing the benchmark returns, what we are getting better than that, or what at least the benchmark returns, we have accelerated our growth, and we are quite confident that we will be reaching this 20 gigawatts significantly earlier, maybe few years earlier to that.
I was about to ask that, because if you will do 10, there is a very healthy pipeline that you have as well, which you've clocked in Feb to June itself. Then 20 in 2030 seems to be a distant dream now. You'll probably do it earlier, much earlier.
Yes, definitely yes.
Okay, we'll wait for the official releases to come out. No harm. Just tell us, how would therefore this mean for the earnings trajectory of a company like yours? Because one question is always the orders coming in, you're getting those. Second is always the funding. You've just done a QIP, if I'm not wrong, and therefore raising money will probably not be an issue as much for you. You've done the necessary legwork for the near term. How does this translate into earnings trajectory? Because you had a strong FY24 too, 30% growth, if I'm not wrong, FY24 on the bottom line. How does this translate moving ahead, sir?
See, the thing is, if you see that a lot of capacities are going to get commissioned during the year, we will be adding close to about 2.5 to 2.8 gigawatt in the current year, but that will come during different times of the current year. This entire 10 gigawatt is going to give me the earnings for full year next year. So it's a continuous process, but QIP raise, what we have done, definitely you are right that it is going to enable us to accelerate our growth. Because there are, apart from these greenfield projects which we are now starting the work, there are a lot of inorganic opportunities which keep coming in the market space, so which we keep evaluating. And as and when we see that we are getting the desired returns, those opportunities also we keep evaluating. So I think the earnings and everything we will see maybe in about a year or year and a half time from now will be the best time to see that what significant change in the earnings come.
Got it. Just before I get to that growth number, sir, would you look to set up additional thermal capacities at all? There is a plan, there is a need. I mean, the government is talking about it as well. Are you looking down that path, or you're happy with the segue into renewable the way you have?
No, see, our major thirst is towards renewable energy. But that doesn't mean that if there is an opportunity which is there, because we all know that the way demand growth, the pace at which the demand is growing, without thermal, at least it will not be possible to meet the demand, and there will always be a crisis. So if there is a requirement which comes, some of the states are now again, which has not happened in the last few years, looking towards coming with the bids which they have come up also for setting up thermal power plant, which we have not seen in the last few years. So we evaluate, and we will definitely be open to explore that opportunity also.
Okay, but nothing concrete, nothing on the anvil as yet.
Right now, no, except which we have said that my unit 2 of 350 megawatt of Ind-Bharat, which is going to get commissioned maybe, if not by this month, at least definitely in July.
Okay. Now, last 3 questions, Mr. Mahendra. First one, when I look at FY24 as well, 2.5 gigawatts, 2.4 gigawatts of solar, 1 gigawatt of wind, I believe 180 to 200 megawatts of FDRE. You're doing a number of different things within this landscape as well. Tell us what excites you the most with a 3-year view.
Yeah. See, the thing is that when we see that this power space that every discom, every state is now evaluating and working on what are the losses they are incurring to optimize the power cost. So it is important that effective use of power intake, what they are PPA they are signing. So we at JSW Energy, like we started with wind, then solar, then hybrid of wind and solar, then FDRE, which is a mix of wind, solar, and energy, battery energy storage, which we have won. So what we have felt that we are working for all key states. I'll just give an example that if we compare a state like Bihar with a state like Maharashtra or Karnataka, we compare, Bihar is majority is agriculture dominated economy, wherein the power consumption pattern on an hourly basis in 24-hour period is very different to Maharashtra, which is a high manufacturing percentage in the total economy is high. Karnataka, which is a mix of manufacturing, more of service industry. So the patterns, we have a dedicated team which works on the usage pattern, and going forward after 5 years, 3 years, how the state is going to be needing the power, and we are designing a solution. And we don't want to be seen, JSW Energy, we don't want to be seen only as a IPP, but we want to be seen as a solution provider by optimizing a product which is best suited for any discom or any state. So that is the theme on which we are working. And in those lines only, we have won the FDRE project also, the hybrid project also, and energy storage also.
Yeah, yep, and all of those are exciting areas. What does this mean? And I know we'll talk about exact numbers, Mr. Mahindra, post your Q1 numbers. I understand that. But various estimates peg growth of at least 20 to 25% CAGR for you for the next 3 years at the very least. That is the limited visibility that I have seen in research reports thus far. Are these outlandish or are these realistic numbers?
See, if we see when we talked about the pace and when we are accelerating this 20 gigawatt by 2030, and if we bring it the numbers ahead, we will get to arrive at the numbers. So I think maybe I will not like to comment on the number, especially at this stage. But yes, we will be definitely fastening our growth, accelerating this with the numbers and reaching this capacity much earlier.
Got it. Okay. Well, we wish you all the best with all of that, and we look forward to talking to you, Mr. Mahindra, post your numbers.
Thank you. Thank you very much.
Well, thank you for joining in, and viewers, thanks for tuning in. Welcome back. Sansera Engineering is a business in focus. Yes, the stock was in focus after a large block got out of the way and an overhang of that equity supply is out. But it's a business in focus because aside of being a key supplier of auto components to some marquee auto OEMs, they've now done various other things, including a group company doing a semiconductor foray as well. Semiconductor packaging, assembly and testing. So lots to talk to Mr. Preetham BR. He's Executive Director and CEO of Sansera Engineering, joins us right now on the show. Mr. Preetham, thank you so much for taking the time out and speaking to us. Great having you today. This is Niraj Shah here. Good morning. Can you just...
Morning, Mr. Niraj. Good to be here on NDTV Profit. This is my first time on your channel. Thank you for hosting me.
No, the pleasure is entirely ours, Mr. Preetham. Would love to understand, for people who are uninitiated, just tell us a bit about Sansera and what are the, let's say, what is the breakup between the different segments that you have currently?
Yeah. Sansera Engineering was incorporated in 81 and it was started by our current chairman and managing director, Mr. Shekhar Vasan, who is the IIT IM alumni. We started production in 87, started as a machining company, machining of precision engineering, forged and machined components. Later on, we backward integrated into forgings. So we have been focused on very, very niche components of both high precision category in engine and transmission for all these years. And we have been the market leaders in most of the components that we do for. As segments, initially it started with passenger vehicles, then it moved on to two-wheelers, then also we forayed into commercial vehicles, then into aerospace and defense. Today, as it stands, post technology changes that have started coming into the automotive industry, we at Sansera have also started diversifying into various other components beyond IC engine components and beyond automotive. So as we speak today, we are into industrial engines, we are into off-road vehicles, aerospace, defense. We have recently invested in a technology startup company who are into, again, as you rightly said, semiconductor packaging and also into radar manufacturing.
Right. So, Mr. Preetham, as I look at, I'll come to the semiconductor foray in just a moment, but as I look at your FY24 growth over FY23 growth, the non-auto business on a low base, of course, grew at about 90-95%. Auto ICE also did well, but the EV segment also did well. Where do you think is the biggest bang buck for growth over the course of the next 2-3 years? And do you become a 70-30, 60-40 or a 50-50 split between auto versus non-auto in 3 years' time?
While the intent of the company is to, diversify into various categories apart from automotive, but to be very honest, there has been a lot of momentum in auto sector as well. While what we have done is, to de-risk our business, we have got into a lot of technology agnostic components in automotive sector. Apart from diversifying into non-automotive as well. So between the technology agnostic components, XEV and non-automotive, company intends to reach up to 40% of these three put together, and approximately 60% will be coming from automotive segment in a near future. That's what is the vision.
Means by FY26 maybe?
It may not be FY26,
27.
FY27.
27, 28. Yes. Okay, fair call.
Yes.
Now, tell us a bit about this semiconductor foray, Mr. Preetham, because as I understand, it's by a group entity and not necessarily by the listed entity. Am I correct? And if so, how does the listed entity benefit from it?
Yeah. Recently, a year back, we have invested into this deep technology startup called MMRFIC. They are a company who are very highly focused on very high-end millimeter wave radars. As a part of that, they have also started doing semiconductor packaging. Recently, they have opened up a clean room facility. Sansera, we have invested, and then we have the right to go up to 51%. This company is very highly focused on high-end radars, which would be also used in both defense, surveillance, electronic warfare, automotive, and so on and so forth. So, as we see today, a lot of adaptation of radar technology is happening even in autonomous vehicles. So we are very focused on bringing this company on board into our existing clientele as well, apart from their own strength in defense and surveillance.
So I have a question. Sorry, is this done by the listed entity or is this done by a group entity?
No, this is primarily done by our investee company.
Even if you go above 51%, whatever, yes, how does the listed entity benefit from this? Does it?
No, basically two things. One is that we see a lot of upside on this business going forward because last 7 years they have done the hard work. Now that the things are getting into the production, and this is a very high technology, very high margin business, and of course 51% of the business proceeds would come into our balance sheet as well. Apart from that, because of their foray into deep into defense and space, Sansera, the listed entity, will also get benefited because of the synergies that we can create between the two entities.
Okay. I get it. Now, the various plans that you have, and we can chalk out one or two of those, but the broad brush number first. And I know you won't be able to give exact numbers because you might be in a silent period. But what I want to know is, when you look at FY27 and non-ICE or non-auto cumulatively becoming hopefully 40%, does it do anything to alter the operational metrics and the return ratios of the company, Mr. Preetham? Because as I see it, from let's say March 21 or thereabouts till now, you steadily maintain your operational metrics at about 17 odd percent, give or take a few percentage points here and there, but your operating margins are around 17%. Would that be the case, or can the newer businesses, the non-auto businesses, hike the overall margins for the company going ahead?
Yeah. So generally our non-auto business is primarily coming from overseas market, which means that the margin profile would certainly be better compared to the domestic market, domestic products that we do. But having said that, in the process of now this high growth, we are also getting into newer segment like aluminium forged components, higher industrial engines. All these are on the it's in the establishing cycle. So we haven't yet fully optimized these cycles. So in the next couple of years, those leverages also would kick in, apart from improved contributions from non-automotive segments as well. So I would like to say that we have always maintained that our margins would be range bound between 17 and 20%. And as the exports improves, the margin should go towards the higher end of this band.
Got it. And in the last 3 years, give or take, you've kind of double your size on the book, on the revenue front, right? Roughly 1550 odd crores to roughly 3,000 crores as of March 24. Do you see that on this high base, but with the newer initiatives, you could again double it in 3 years' time? Is that a possibility?
Actually, to be very fair, we are in Amritkal. So a lot of good business inflows are coming into India. And if you really look at our order book, which is at the beginning of this year, it stands at about 1,600 and odd crores. What I mean by this is a peak annual revenue when the entire business matures, and this is not yet contributed to any of our current business. So our 2,800 and odd crores, which is going to have the normal growth, including the industry growth and some unmatured business in that which will grow, plus add to that this 1,600 crore, we should mature in the next 3 years' time. And if you really add and do a simple maths, I think we should be able to achieve 15 to 20% CAGR growth over the next 3 to 4 years. So I don't see any issue on that.
And last question, because again, I know you can't talk too many numbers. Maybe you can't get into too many details. So we'll do that when we do the quarterly earnings interview, Mr. Preetham. Completely appreciate that. But one last question. Do you intend to improve, and is it possible to improve the quality of growth via better return ratios as well? Because that's maybe it's a lot of businesses are newer businesses, so ROCs don't jump up as much. But do you reckon that from these mid-teens, your return on capital, ROE, etc., can inch higher over the course of the next 2-3 years?
Yes, in fact, the company is working on a company-wide, goal of achieving 20-20-20 on all the three parameters: growth, EBITDA, and ROCE. But having said that, ROCE, as you rightly pointed out, would be the most difficult and the challenging one. Because our business is also quite capital intensive as we are fully integrated. That is what is bringing us the new business and more complicated business as well. So as our contribution from newer segments and the non-automotive business and exports improves, I think the ROCE will also be there. I think that would be the last one where we will be able to achieve. But we are very confident. This year also we are investing about close to $70 to $75 million into our capex, into newer programs. So we are looking forward for a really good couple of next few years.
We wish you all the best for that and more, Mr. Preetham. Thanks so much for taking the time out and speaking to us. Look forward to talking to you. Maybe post your quarterly numbers.
Thank you very much. Thank you for hosting us. Thank you.
Pleasure was ours. That's Sansera. Hopeful of maybe 15 to 20% growth compounded for the next 3-4 years at the very least, with a lot of plans up their sleeve. Semiconductors by group business, but they will get